Hello, traders. Welcome to another daily market analysis video. And today is 9th May 2022. So we are going, today is Monday, actually, it's the beginning of a new week. So in this video, we're going to be looking at the S&P 500 dollar index, the volatility index, and the euro US dollar. So we all know quite well that the current sentiment in the market is very, very aversive to risk. So we are in a very massive risk aversion, which means high risk instrument like the equities have been falling for a very long time now. So please, before I continue into this, you can get the latest market analysis on our website www.greenwavex.com. So we can read our the latest market analysis from me, which is the week ahead, and then to know the major events that are driving the market. Okay, so let's quickly dive into what we have for today. Okay, so let's start with the S&P 500, and it's very clear that this is a very, very big bearish run. So the bearish move started. In fact, for it has been like that for the whole of this year, apart from this big corrective bounce that we had between late February and the end of March. Okay, so currently price is very close. In fact, it's at the lowest we've seen in the last in the last 1 year, and is very much likely to drop down further. So this is majorly because of the global GDP shrinking further, and of course the central banks getting more aggressive in terms of rate hikes and all that. So investors are not really very much confident with the policies, the aggressive tightening, and they are trying to look for cover. Okay, look for a safe haven instrument to invest in, and that's actually been the dollar. The dollar has been the major dominant instrument for the major for most of this year. Okay, so but how much longer can this last? Because what I'm seeing on the S&P 500, it's like the price is very close to this bottom. This is still very much corrective. If we look at it, that we have a lot of overlapping here and there, and so it means the price is still very much corrective. Okay, this is not really a very big crash. Of course, it's a very, very big bearish correction. Okay, and at the end, I think maybe this particular trend line, I mean channel, may find may provide some kind of support for the price. Okay, but we can get things much clearer or better from the volatility index, which has been a very, very good S&P 500 tracker. Okay, so the volatility index give us a kind of range, okay, upper range and lower range, okay, which means if the price goes to the upper range, then S&P 500 is most likely going to rise. Which means the volatility index is most likely going to fall, and at the lower range for the VIX, and we might see the S&P 500 fall, which means the VIX might rise. Okay, but this range used to shift, as time goes on. So this was what we had between between March 2021 and November 2020. So we add this range, okay, for the VIX, and but currently this is what we have for the VIX, and it looks very clear, okay, from this chart that the VIX is very close. I mean, in fact, is at the top, okay, at the upper boundary of this range, okay, which means that we might see the S&P 500 start picking a move downwards. Okay, but before that, I think the VIX might still make some move, as we can see the way it opened today. It's pointing to the upside, and might still come back to retest this place. Okay, that's the upper boundary of the VIX, and which definitely means that we might see the S&P 500 start picking some bullish run. Maybe it's going to start this week. Okay, can't really tell exactly when it's going to start, but it looks like it's very, very close. Okay, so the S&P 500, let's go back to the chart of the S&P 500. This is clearly a corrective pattern, like I said earlier, and then we might see price drop down further. Okay, and that before it pushes up. So if we can see a break above the trend, this trend line, then I think the S&P 500 is going to start a major recovery from there. All right, so of course we also need to look at the events that are leading to this. If we see a very, very sharp support from the fundamentals, from the sentimental events that are happening around the world. So I think that is going to determine how much bounce we're going to see on the S&P 500. Okay, so that's it. Then the dollar index, looking at the dollar index, we're about to break above this key resistance zone. Okay, let me go to the daily time frame so that we'll see the zone better. And so price is about to break above this key zone, okay, which means that further rallies can happen from there. But of course, we might also find some rejection there. It's not really been a big break so far. It might just break a bit and then collapse downwards. So we just have to keep our eyes very close to the dollar index. So I'm plotting this. I have this rising trend line, okay, as a kind of a gauge for this bullish trend, okay, especially from here. So if the price maybe after going a little bit like this and then break sharply downwards here, I think we might see the dollar relax, okay, from this bullish run, okay, maybe for some days of maybe for like a week or two, okay. That might happen at the same time where the S&P 500 drops to that bottom. So it's very very important that we take note of that, okay. But that's just still maybe some days away. So clearly for today we're still going to see more of the dollar rally, more of the S&P 500 decline, okay. So we're going to definitely expect that. Okay, so that's it. Okay, maybe if you want to, yeah, get your hand on the S&P 500, maybe just if you're not already in a bearish position, I think the best way to look at this, in my opinion, is to sell the next corrective bounce, just like we have all these bounces here. Okay, broke, goes down, so that, I mean, went downwards, another bounce here, corrective bounce, broke, another corrective bounce here and broke downward. So so far the tops are still being very well maintained, which means that the S&P 500 is still expected to continue downwards today. So maybe kind of bounce here before it drops further. And so the opposite is the case for the dollar index. So another dip, okay, before the next bounce. But it's very very important that we note that price is getting to that to the top. And so anytime this week we might start seeing the dollar falling and even the S&P 500 rising. So it's very very clear we watch this, okay. But for today the status quo is expected to be maintained. And so that takes us to euro US dollar, which still looks very very much bearish, okay. So price just completed another corrective bounce here at 1.0640. That was last week, just like we had one completed at 1.0936. That was in late April. Okay, so with this happening now, we're having some kind of support base here, okay, which I don't think they will be strong enough to hold the price. So if we see a break below here, then I think we should be able to see further decline, okay, to 1.04, 1.035, okay, around 1.0369, which is between that 8.2% Fibonacci projection of this move, this all move, okay, from here. All right, and so that's it for the euro US dollar. Basically still very much bearish, okay, but this zone we really have to watch what happens around these zones, okay. So so let's look at let's look at this more, um, let's look at it more strategically, okay. The major scenarios that we might have today, okay. The first one is we might see the price, where's my drawing to, okay, we might see the price come back to retest this zone here. So we might see the price come back to retest this zone here. All right, so retest, sorry about that. So we might see a retest of this zone. All right, so it now depends on what happened afterwards. So if the price gets to this zone and gets rejected, maybe with a break away from here down this way, then I think we are going to see more bearish run that should be able to trigger bearish opportunities, okay, in my opinion. And of course, if but if the price breaks above the zone, then I think we're gonna see further rallies to 1.0750. Okay, but if the price doesn't get here but instead breaks below here, then further decline to 1.0350, between 1.0369 1.0350 should follow. But of course we should also look at the possibility of price staying further within this range to maybe complete a triangle pattern. So that's also another possibility. Okay, a triangle pattern, that's price stays longer within this zone here. Okay, and so if that happens, then further decline we should be looking forward to further selling opportunity. Okay, so that's it from me. Okay, as far as this video is concerned, so I'm going to see you in the next one. Thank you very much for watching. Have a wonderful trading week. Bye.